I'm kind of glad that that crazy 2 weeks full of earnings are behind us, and we don't have anything like Amazon, Apple, Microsoft, Netflix showing up with their earnings and completely changing market direction in the matter of a few minutes. So that craziness is behind us. I do want to reflect on last week real quick before we move on to the market outlook. And if you remember, this is the earnings chart from last week. And on Tuesday, we had Amazon earnings, and Thursday, we had Apple earnings. If you look at this earnings season, so the markets are driven a lot by sentiment. A big component of the markets is irrationality. And irrationality is basically driven by sentiment. And this is from my experience, what I've seen is that during earnings season, the sentiment is set in the beginning. So usually the banks report earnings first, the financial institutions, and then the following week stuff, Netflix and Tesla, those stocks start reporting. And whatever sentiment you see being reflected in those first few earnings usually carries over through the entire earnings season. Now, in the last two earnings seasons before this, the sentiment was overwhelmingly bullish. A CEO could say a word like AI, they could say something like layoffs, and that was enough to, shoot the stock up by 10%, 15%. So that was the sentiment in play. This earnings season, what I have observed is that no matter what, earnings are actually coming out pretty good. So I would say 80% of the stocks are reporting earnings beats. Yet the initial spike after the earnings event usually gets sold off. That's what I've been seeing throughout this season. And let me show you some charts to prove what I'm trying to tell you. Okay, so let's start with Netflix. So Netflix, if you remember, actually beat earnings, and it was a really good earnings report. But all they did was, this only mistake they made was saying that we will not be publishing subscriber numbers going forward, and that was enough to punish the stock. So if you look at this icon at the bottom, that's the earnings day. And look at this massive gap down. This is despite good earnings, by the way. So that's Netflix. You can pull up any stock. You can pull up Microsoft. This is earnings day. And look at that massive gap down. Yes, the stock did go up, but look at this. The earnings spike is not able to hold. What I'm trying to say is any earnings spikes are being met with massive selling pressure. So that's Microsoft. Let's look at Amazon. So again, Amazon blowout earnings, right? Really good earnings. This is the earnings day. Look at this massive red candle. There was a spike, got sold off. I'm only talking about post earnings reaction the next day. So this has been the prevailing trend. You can look up any stocks. Most stocks have reported earnings beats. You get that initial spike after the earnings, and then it gets sold off. Now the only problem is Apple. So Apple came out with their earnings. So the crazy part about Apple is it was a horrible earnings report. Okay, expectations were really low with Apple. I think sales in China are down. Say iPhone sales are down like 17 or 18%, and everybody knew that. So the expectations were so low that I was I had posted in my Discord, all Tim Cook has to do is sprinkle some AI dust on his earnings call or mention something AI, and that should be enough for the stock to go up. Now what he did was he played the earnings playbook amazingly well. So if nobody's buying your crap, how about you buy it yourself? That's what he did. So he announced the biggest buyback in history. No company has ever announced $110 billion stock buyback. And the earnings were bad. iPhone sales are slowing down, yet the markets didn't care about that. So you see this huge spike after earnings that happened, and that is what caused on Friday the markets to shoot up like crazy. Having said that, the reason I'm showing you all these charts is I'm just pointing out from a historical perspective that once you see a certain kind of sentiment during earnings season, that sentiment usually prevails. And if there is any truth in that, we'll find out next week. Nobody can see the future, but I'm just talking from historical perspective. If there's any truth in that, then this massive spike should be met by selling pressure, and we should eventually go down and fill this gap that we saw. But again, it's the stock market, anything can happen. Nobody knows the future. But something to watch out for. Let's see how next week plays out. Okay, that was earnings last week. Now let's look at the earnings calendar for next week. So earnings season is still pretty much in play. And I have highlighted some of the stocks from our watch list that are reporting earnings next week. So Berkshire Hathaway, Disney, Annette, Wayne, Crocs, Ferrari, all these stocks are from our watch list. The good news is that there is nothing like Microsoft, Amazon, all those Mag 7 stocks which are capable of moving the markets on their own. So these stocks, yes, they will have an effect on the markets. For example, ARM, when they report earnings, that will have some effect on the semiconductor sector. Then Disney will have an effect on the consumer discretionary sector, but these will be like very muted compared to the Mag 7 stocks. So nothing crazy, which is a good thing, because when faced with earnings from the trillion-dollar companies, mega cap stocks, it's really hard to rely on technical analysis, because one stock can change market direction, and we have seen that in the last 2 earnings seasons. Thankfully, we don't have to deal with any of that craziness. I know Nvidia is coming out with the earnings later in May, so we have at least a couple of weeks to just focus on technical analysis instead of worrying about what one stock may do to the market. Okay, last week I did not share the RRG charts with you guys, the relative rotation graphs. As a quick reminder, if you haven't watched my previous videos, all these charts show you is how the money is flowing in the market. So which sectors money is flowing into, which sectors money is coming out of, and based on that you can make your trading decisions. So XLK, which is a sector of interest, technology, finally entered the lagging quadrant. So this is really interesting. So we did see a massive movement in the stock market on Friday, and it was like Dow Jones was up like almost 500 points, and it appears that this pullback might be over and we might be going back into a bull market. Look at the picture that the sector rotation graph is painting in front of us. So given that this hasn't updated, so it's ending April 29th, so it hasn't reflected what happened on Friday with Apple earnings. But note that XLK has finally entered the lagging sector. And what I have been pointing out to you guys is that if you want to take bearish trades on any sector, let that sector enter the lagging quadrant, and that's when you could entertain the thought of taking bearish trades. And XLK has entered that sector finally, and I think it has been there for at least 2 weeks now. So let's see what next week brings. If Apple changes market sentiment next week and markets continue to go up, then this picture will change. But if sentiment for this earnings season prevails and Apple spike gets sold off, then there is nothing else left to lift these markets. All the Mag 7 have already reported earnings. So this could be the time to consider start taking bearish trades on the tech sector. Okay, so the only other thing I want to point out in this market outlook is the chart of SPY. And if you remember, I have been pointing out that we saw a pretty decent sized sell-off, but we never got a correction. And we are seeing a sizable bounce. The question that we need to answer is this bounce, does this bounce represent a change in trend? So is this pullback over and then we just go up from here and make new highs? Or are we going to get a full-blown correction before markets turn around? Now, this being an election year, I do believe that markets will end up positive at the end of the year. But this is again my belief that things don't go up in a straight line. The bull run that we have seen in the last 5 months is like insane. And there needs to be a reset before we go up again. And that is why I've been waiting for the correction, which will be somewhere over here, SPY 467, 470 area, which sounds impossible right now if you look at the chart. Like there is no way SPY will fall that much. But corrections are pretty normal, and they are healthy. They are required for the markets to go up. So how we can answer this question, whether it's this pullback is over or this bounce that we got is only temporary and we head down further. And the level I've been pointing out is we are actually almost there. So the level is 513. So the level I've been pointing out is if SPY takes out 513, and this could happen as early as next week, then you could make a reasonable assumption that this pullback is over and the markets are going up again. And you could start either balancing out your bearish trades or start taking more bullish trades. Now, the thing is, this area is so critical that we are almost there, and if we get rejected at this level, that could signify further downside. I'm happy in a way that we don't have any kind of macroeconomic data or market moving earnings coming out, because next week should show us which way we are going. The problem with when we have CPI, PPI, all this jobs data coming out along with earnings, is that yes, you can use technical analysis to make projections into the future, but these one-day events change market direction completely, and it makes it impossible to gauge with any kind of reliability what the future might look like. So in the absence of all these events, which is next week, we should get a pretty clear picture of where the markets are heading.